My name is Michael Toth. I am the Senior Vice President for Public Policy at Rex Homes, and I am delighted and honored to be joined by economist Ben Harris and Rob Hahn. Today, I will introduce Ben and Rob briefly, and I will try to keep my questions brief also, as we are joined by two prominent experts in the field of real estate. Ben Harris is the founder and principal at Cherrydale Strategies. He's a professor at the Kellogg School of Management and chief economist for Vice President Joe Biden. Rob Hahn is the founder and managing partner at 7DS Associates, a strategic consulting firm specializing in creative solutions rooted in strategic analysis and data. But many of you watching may know Rob from his very well-known and closely followed blog, where he writes under the name Notorious ROB. Where he covers topics on real estate, technology, and marketing. Gentlemen, great to be with you both today. Ben, we'll start with you. Last time you were on, we talked a lot about the real estate market as we were moving into the shelter-in-place orders and COVID-19. How do things look to you today?
So things are still incredibly uncertain. If we want to look at the whole housing market overall and say, so what's going on right now? I think the first point to consider is that we had a pretty strong housing market coming into this. Mortgage rates were low, inventory was low, houses were being sold relatively quickly. Of course, it depends on the market, but it was, sort of steady gains in a housing market, sort of generally healthy overall. And then COVID came along, and obviously, like the rest of the country, everything came to a near immediate stop, and that's no different for the U.S. housing market. If we look at some projections about what's going to happen in the future, a lot of that's based on what's happening exactly today. So if you could look at surveys of sales, we see that home sales are down about 30% year over year. A lot of that's driven by declines in listings. So listings are down by roughly the same amount. Mortgage purchase applications are down by about 24% from the prior year. So it looks like overall housing activity compared to this point last year is down by about 30%. If you believe Fannie and Freddie, and they have good analytics there, they say that we're going to have about a 45% downturn in this current quarter. So basically everyone's acknowledging that in the second quarter of this year, you're going to see a decline of about a third to 40%. The really interesting question, I think, is what's going to happen going forward. And that's unknown. A lot of it depends on what's going to happen with the coronavirus. So there's, the more optimistic view is that we go back to normal really quickly. People have spent the past few months in their homes. They realize the value of housing. Maybe they valued housing even more. There's a big shakeup in workers. We have 26 million people who have applied for unemployment benefits over the past 5 weeks. So some of those workers are going to need to move in order to find a new job. So if you want to be optimistic, you can say, look, one, things will go back to normal relatively quickly, or at least normal enough so that people feel comfortable buying that home. Two, there's going to be this sort of dislocation in the labor market that might drive some buying and selling in the market. And three, and this has been, I think, a good thing, is that this decline in listings and decline in volume hasn't really translated into a decline in prices. And so to the extent that we hopefully get back online relatively quickly, we can kind of pick up where we left off. Prices won't have changed that much, and we'll sort of go back to normal volumes. That, of course, depends entirely on what happens with the virus. And if this extends longer than we think, if we have a double dip, and after all this social distancing has worked, if we go back to do our normal lives and then all of a sudden we see this virus return, then of course that's going to impact the housing market just like everything else.
Ben, given some of the pressures and uncertainties that you mentioned, are there currently efforts by the federal government underway to shore up the housing markets? And if so, what are some of the interesting real estate efforts that you've seen at the federal level?
So I think that the relief is coming at 3 different levels. There's the federal level, there's the state and local level, and then there's the private sector. So at the federal level, a bunch of different stuff's been done. Perhaps the biggest is that if you have a mortgage that's backed by Fannie or Freddie, you'll get 6 months forbearance, possibly extended up to a year, depending on what happens. with the virus and the economy. That's a good thing, right? So there are a lot of people who have been laid off. There are a lot of small business owners who are hurting right now. People are having a hard time paying their mortgages. Forbearance is a good thing. At the state level, we've seen similar efforts to go ahead and institute often 90-day forbearance periods. But that still leaves a fair amount of homeowners exposed. And so if you don't have a mortgage through Fannie or Freddie, that there's a chance that you're going to owe that mortgage. We've seen at the private sector level, banks have released guidance as far as what they're going to do on a bank-by-bank level. So if you go to the website for the American Bankers Association, they've released bank-specific policies. Some banks are just being transparent and saying, look, we're going to offer forbearance. Others have said, look, give us a call, we'll work something out. It depends on your circumstances. I haven't heard any examples of people going into foreclosure or banks being unreasonable with forbearance, but I'm not in all these conversations, so who knows? One problem that we're dealing with now is that a lot of homeowners are saying, look, that's great. I've got a loan through Fannie and Freddie. I know I get this forbearance period, but what happens at the end of it? Am I going to owe all of these mortgage payments all at once? Some people have reported they've called up their banks and have heard, for example, a written recording saying, yeah, at the end of this, you're going to owe all of it back. And that obviously gives people cause for concern. How can I possibly pay 6 months of mortgage all at once? So I think we're still working this out. Other concerns are for landlords. So there has been some federal relief for borrowers from multifamily properties, but maybe you've owned a home at a multifamily property, or maybe you're a landlord. You want to offer some relief to your renters, but you're looking for other relief. You might not get it at the federal level. You might not get it at the state level. So overall, I'd say it's been a decent first pass from the GSEs, but there are definitely holes in the safety net.
Well, one more question for you, Ben, and then we'll turn it over to Rob for a minute. We've seen across the economy, obviously, a drop in consumer demand and a downward pressure on prices. Is this a buyer's market in real estate? Why or why not?
So, I think that it depends entirely on what happens in the future. So right now, we've seen listings fall. So there's less of an inventory. So as a buyer, you have less to choose from. That's bad. Also, I think that there is a possible concern. If you think that the economy is going to be in rough shape for the next 18 months or beyond, if you think unemployment is going to persist, then you may say, look, prices are going to fall. Eventually, all these economic pressures are going to bleed out into housing prices. The declines in volume is going to bleed out into prices. I don't want to buy at a high point. Then maybe it's not a buyer's market and maybe you should wait. But there are other reasons to be encouraged. Mortgage rates are, today they're about 3.7% for a 30-year fixed on average. That's pretty low. Also, that I think that there may be some home buyers who are saying, look, I want to get out ahead of this. I actually want to sell my house. There aren't a lot of people coming to buy. Maybe you're the only person who came to an open house. And so, as we know from economics, when there are a lot of sellers and just a few buyers, you tend to see a decline in price, and maybe you can get a better deal. The answer to that question depends entirely on what's going to happen in the future. And if we do see a bounce back, then I think you're going to see a bounce back in prices and a bounce back in volume. If we have this prolonged crisis that goes on for longer than a handful of months, then I would expect that some of this decline in volume is going to bleed out into prices more than we've seen, and that means that maybe you should hold off. One thing that is good for the market, regardless of when you buy, is I do think that mortgage rates, they're low, and I think they're going to stay low. So that should give some buyers some comfort when they're deciding exactly when to jump into the market.
Rob, over to you. I know from our conversations earlier this week that you and your family actually are recent home buyers.
We are.
So tell us about your experience in buying a home with Rex.
Certainly. And first of all, thanks for having me on. It's a pleasure. And just to clarify real quick, I'm not an economist, although I kind of look like Lawrence Yun. I get that a lot. Just to point that out. I think the experience was interesting. We've been in Las Vegas for almost a year. And we decided, okay, this is home, right? We were in Houston before that, Greenville, South Carolina, all over the country, but we decided this was home. So we started probably before this whole, the pandemic and the shutdown happened, but it happened in the midst of it, right? So the experience was really kind of neat. One of the interesting things about buying it through Rex, through you guys, was in the midst of this, we lost our buyer's agent. I think it was a furlough situation and nothing was missed. Do you know what I mean? Like, because we were dealing with the company, I felt like all the information, all the files, where we were at, just transferred smoothly to whoever stepped in, to Jason, who's kind of stepped in, right? So I thought that was kind of neat. Some of the other stuff, and this has informed kind of my take on where things are going to head in the industry. We toured, a couple of homes because real estate was essential here in Nevada. And as long as we practice certain precautions, we were able to actually physically tour homes. And I got to tell you, and I'm not, I'm fairly young. I'm in good shape. I'm not that worried, that concerned about Corona. Even then, walk into a home that was occupied, meaning a family was still living there. They'd obviously just vacated for our buyer tour. It was a little nervous, right? So the house we ended up buying ultimately was vacant. And when we went to it, we were able to spend as much time as we want, and I think that was psychologically a little bit comforting. Other than that, it was fine. The one thing I would like to kind of point out, and hopefully this is something that Ben can discuss as well, the fact that we still had to have wet signatures from a roving notary, right? In this day and age, kind of annoyed me, right? So again, this isn't exactly what you asked. This isn't necessarily what we're going to talk about, but part of me does feel like some of the things that maybe the federal government, maybe the state governments can take a look at are some of the regulations, some of the things that we had done prior to this and had always done. Look, maybe it's time to revisit those, right? Like, what would have been an issue if we did a Zoom call so notary could see us signing, like digital signing, documents? It feels like those types of things could be done. But I know like our appraisal was done as on a drive-by basis, on the special sort of dispensation that Fannie and Freddie accepted. So, I think on the whole, it was relatively pain-free. Whatever pain exists, I think comes from the unique special circumstance of every home purchase, every home sale, the seller's personality, the inspection report, all of that. But it actually went pretty smooth.
And I know one of the programs that Rex offers to buyers is the buyer rebate program. Just wanted to hear you share with our audience kind of how the buyer rebate program worked out for you and your family as you went through the home buying process.
Well, I mean, it worked out great for us, right? And one of the reasons why my son and I use Rex, because we're both in the real estate industry, right? So we've done this before. So, we just felt like, what, we kind of know what we're doing. The rebate is real nice. It helped pay for a lot of moving costs and things like that. So I think it worked out great. Is it for everybody? I'm not sure, and that's, obviously I saw Jack, and actually I saw Ben, on the Brookings Institute panel. I think it was last year, maybe year before, talking about sort of transaction costs. And I get it, and just personally, because we're experienced, because we know how the industry works, we felt it made sense for us.
Wonderful. Well, Rob, we love your blog.
Yes.
We love reading your blog. We love keeping on top of your current thoughts in the real estate market. And obviously you mentioned earlier in this conversation a couple of things that you kind of experienced going through the home buying process during COVID-19. What are you seeing sort of across the industry? What are your takeaways? Where do you think the industry goes in the months ahead in light of the changes that we've seen under COVID-19?
Sure. I think the first, I'll caveat this by saying nobody knows anything, right? Myself included, because we're still kind of in the midst of this, right? So take everything I'm saying with just that caveat, and everything depends on how long this lasts, what happens, is there a second, a spike in the fall? All of that is true. Having said that, I've been talking to a lot of brokers and agents, doing as much research as I could on it. And I think generally speaking, there are probably 2, 3, maybe 4 really important things to think about. One, cash is king. And we've seen that over and over and over again. I do think we're going to have a number of brokerages, a number of agents just not make it because they don't have sufficient cash, right? That's number one. Number two, as a result, what I'm seeing happen in the industry is we are going to see agent teams completely dominate as we go forward. Now, that's a trend that's been happening for 10 years, 10 plus years. What Corona does is just really accelerates that trend. So I'm hearing a lot of that, like as the time everyone else is pulling back, agents, brokers, they're laying people off, they're cutting off spending. At the same time they're doing that, a lot of the teams are actually doubling down and they're getting aggressive and they're picking up market share. So I fully expect to see that happen. And as an FYI, companies like Rex, Redfin, and the Hauser, and some of these other companies that are out there are brokerages, but if you look at the way they function, these are effectively large agent teams. So I think there's going to be some real growth on that side of things as well. The third thing I think is the psychological and cultural change. And this one I'm kind of speculating, but I don't think I am. I think it's a matter of asking sort of the American public how people feel about this. After this is over, even if lockdown's lifted and all of that, how eager will people be to have 50 strangers walking through their home? Even with precautions, gloves, booties, whatever. I'm not sure that that's going to happen, right? And like I said, when we went through this process, the fact that the home we bought was a vacant home was helpful for us. I actually think what this ends up being is vacant homes will gain in value, right? At least psychologically. I think more sellers are going to just want to figure out, okay, how can I sell my house and not have to live here, right? Whether that's iBuyer, whether that's iHome flipper model, whether that's, we're just going to move out for a while. I think that's going to be a big part of this. And I think the industry is going to have to respond to that. As a buyer, if I can, I'd much prefer to tour a vacant home that I know has been disinfected and cleaned thoroughly and all of that, as opposed to people sleep here and I don't know who they are, right? I don't know what their habits are. So I think that's something that we'll have to wait and see how that plays out. And then finally, I think what we're seeing is it's like every other industry, technology, like look at what we're doing, right? This video, Zoom, WebEx, I think it's completely started to sink in that we can be just as productive, doing things this way as opposed to having to physically go somewhere and sit in an office. So I think that's going to have some real repercussions, maybe not at the broker and agent level, but certainly at the MLS association, tech company, those levels.
And I'll get back to that in a second, Rob, because I think we're going to end on a hopeful note. I saw your blog post that talked about some of the positive implications of that point. But wanted to bring Ben back in. Ben, you've done work on transaction costs. You've done work on a number of the items that Rob touched on in his responses. Just wanted to see if you had any further comment on anything Rob said, or if you wanted to touch on kind of over the medium term, what are some of the factors that may determine what kind of housing market we have going forward?
So I thought that Rob's comments were really interesting, particularly I always think about this from the buyer's perspective and how you feel walking through a home, but from a seller's perspective, just magnify that times 100, which is you've got this parade of people coming through and you're probably uncomfortable with it. I think that's a great point. On technology, the first time you try something is always the hardest. And then after that, you become accustomed to it. I can give you lots of examples, but there's certain things that I've tried as far as the way I communicate with other people that just work really well. And now that I've done it once or twice, I'm just kind of hooked on it. So there are going to be some good things that come out of this crisis. And I think that communicating virtually is certainly be one of them. We're going to get rid of some of these inefficiencies. I don't know about appraisals and the notaries, but Rob makes a good point. Like, why do we need to, the notarization feels antiquated, and hopefully we can sort of update that for the 21st century economy. As far as the guideposts to look at, if you're concerned about what's going to happen with the economy, so unemployment is incredibly important. I mean, there's just no way you're going to have a strong housing market if you have an unemployment rate of 30%. I will say, though, and that everyone knows that all housing markets are local. And when we look across the states and say, how are the labor markets doing, there's huge variation. So states like Hawaii and Kentucky, Michigan, Pennsylvania, they've seen over 20% of their labor markets go ahead and apply for unemployment insurance. But other states, a lot of states that have less population density, states like South Dakota, states like Wyoming, they've seen rates of less than 10%. And so it's a lot less severe in those states. So I think that it's going to be on a state-by-state basis. But you're going to want to check unemployment if you're trying to track the overall housing market. You're going to want to look at interest rates, but like I said, I think those are low and they're going to stay low. And then I think you're also going to want to check to go ahead to see people's general confidence. What are expectations like? So much of housing has to do with how people expect the future housing market to look like. And if people are really pessimistic about what's going to happen in the economy, you're probably going to see that sort of transfer into housing prices. But if people feel like we're on the cusp of a comeback or that we are on a comeback, that's going to go ahead and raise housing prices as well. So the three things you want to check: unemployment in the local market. I think you want to go ahead and look at consumer confidence. And then you also want to go ahead and look at mortgage rates.
Rob, last question for you. Ben mentioned the difference between the high density states and the lower density states, and that kind of ties into that hopeful blog post that you recently put up about an increase in tension to the exurban areas, to rural areas. Where do you see that going? What led you to make those observations in that blog?
Yeah, I'm actually becoming fairly convinced that we're going to see this. Maybe not this year, maybe not next year, but I think this is going to happen. It comes from the fact that
tell us.
I mean, basically the way that we work, right, because of Corona has completely changed. Like these tools, Zoom and Slack and email, like all of this has been available, right, for years and years. It's just we didn't accept them culturally, right? Culturally, there was still this notion of you get dressed in the morning, you get in your car, you drive, to work, and you go to work at an office, right, in a cubicle farm. With Corona, I don't see that happening. Like, first of all, I just don't imagine like the open floor plan cubicles being a thing anymore for a real long time. And then if you look at it from the business's standpoint, typically rent, occupancy costs are among the highest expense items. Why are you doing that if you don't need to, right? And again, there are certain jobs where you obviously physically have to be there, right? So I think in the post I said, doctors and nurses, you know what, you kind of have to be there. Plumbers, you kind of physically have to show up. Web designers, you don't. Lawyers, maybe you do, maybe you don't. I mean, court, you might have to show up. But there's a lot of white collar jobs. And by the way, those are the people who really are buying homes anyway. That could be done remotely. Okay. To me, cities made a lot of sense. Urban living is wonderful. I've done it. I love the city. But in the age of pandemic, I'm not sure if that's really, it changes the equation a little bit. But the other more important thing from my standpoint is we already know urban areas had some serious housing affordability issues, right, going into this. If you're a 31-year-old, even if you're making good money, say you're an attorney, right, and you're in San Francisco, I got news for you. You're likely not buying a house. You know what I mean? Like that was just a thing that we saw. If we have remote working kind of be the thing, I think what a lot of the millennials, the first-time home buyers will do is they'll skip over the suburbs, right? Because having lived in suburbs, I don't know what you guys think about them. It's a compromise, right? Between having a little bit more space, a bigger backyard, etc., but having the proximity to work. If you don't have to make that compromise because you could telecommute to work, why wouldn't I go maybe 2 hours outside of, the urban center, right? And get acreage, right? And have backyards that are measured in acres. And the point that I made was the exurban rural counties are some of the most beautiful places that we have in this country. Like a lot of our national parks are exactly in these exurban counties. If I'm a 31-year-old attorney, why wouldn't I think about going there? Where, by the way, home prices are a fraction of what they would be in the city and even in close-in suburbs. So I kind of feel like this is what I anticipate will happen. The big X factor, the big question mark to that is high-speed internet available in those exurban counties? So you're in Austin, so think about like, if you drive 2 hours outside of Austin, I mean, you're in some really amazing, wide open landscapes, right, where you could probably get 10 acres for what you would pay for a 1-bedroom, condo in downtown Austin, right?
Right.
Does that become attractive? And I think the answer to that is, do you have high-speed internet out there in your 10 acres? I think we're going to see that. I actually think there's some real business opportunities for the Verizons and the AT&Ts of the world to say, we're going to lay high-speed, internet out there, or maybe it's 5G that does it. Who knows, right? But I do think that migration will happen, which I think is kind of good news for those realtors, those brokers, those sellers potentially who have properties, who work in those exurban markets. So that's a real positive I see happening.
Wonderful. Well, on that positive note, Ben and Rob, it's been our pleasure to talk to you today on this Rex Trends podcast. I look forward to the next one.
Absolutely.
Thank you very
Thanks for
much.
having us.